This episode of the Planet MicroCap Podcast is brought to you by Friedman LLP, a top 40 global accounting, tax, and business consulting and advisory firm, providing a full spectrum of services for public and private companies since 1924. Contact Friedman when you will need to raise capital and adhere to U.S. standards. The Friedman partners will work diligently with you to provide the financial assurance, regulatory, and transactional services you need. When the stakes are highest, Friedman makes sure you are well equipped. For more information and to get a Friedman free consultation, please call 856-830-1660 or email Neil Levine at nlevine@friedmanllp.com. Again, for more information and a free consultation, call 856-830-1660 or email Neil Levine at nlevine@friedmanllp.com.
This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap Podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.
Welcome to the Planet MicroCap Podcast. I'm your host, Robert Kraft, and thank you all so much for the support and for tuning in. You can follow Planet MicroCap on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT, and you're listening to episode 162. If you have any questions or comments, please feel free to tweet at me or shoot me an email at rkraft@snnwire.com. And when you do get a chance, if you like what you hear, please rate and review Planet MicroCap on iTunes. It really helps provide feedback for me and spread the MicroCap message. Save the date. The Planet MicroCap Showcase Virtual is here. It's coming. It's taking place April 20 through 22, 2021. The website is live now. You can find the full details for the event at www.planetmicrocapshowcase.com. Registration is open, so if you want to register, just click the register button once you're there, and you'll be all set. I have many announcements coming. Some speakers, sponsors, companies, the whole deal. So I'm very excited about our lineup that we have in place for you this year. This week from the SNN Podcast Network, we have the following shows coming up. New episodes of In the Market Trenches with Gary Reeby and Eric Fiore, and the Investors Roundtable are coming this week. First up, Gary and Eric welcome you all back after a little brief hiatus to provide their takes on what has been an eventful first couple of months in 2021. Meme stocks, crypto, Pascal's wager. You'll find out when you listen how that relates. SPACs, vaccine rollout. They cover it all. You can check out this episode on Apple, Spotify, YouTube, or Podbean at inthemarkettrenches.podbean.com. On the Investors Roundtable, our topic is earnings. Year-end and Q4 results have been rolling out, and figured this would be a good opportunity for us to discuss what our panel has seen thus far, how they're assessing 2020 results, things investors should look out for in the filings, and more. You can watch this episode on the SNN Network YouTube channel at www.youtube.com/SNNWire and listen to the audio version on this very stream, the Planet MicroCap Podcast stream. Now, for this episode of the Planet MicroCap Podcast, I spoke with Charley Grant. He runs Heard on the Street at the Wall Street Journal. It's not often that we get someone who writes a daily column for the Wall Street Journal on here. So we discuss all the 2021 hot topics he's been writing about. Bitcoin on the balance sheet, Tesla takes. We're just trying to make sense of what's been happening thus far, despite only being the end of February. I had an absolute blast chatting with Charley, and I had no doubt that you will enjoy hearing his insights on here. So thank you again for tuning into episode 162 of the Planet MicroCap Podcast, and please enjoy my conversation with Charley Grant. Welcome back, everybody, to the Planet MicroCap Podcast. I'm your host, Robert Kraft. You can follow me on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. And all my guests are incredible. I love having every guest that I have on here. Quite frankly, I still ask myself why they talk to me. I'm very thankful that they do. But, it's not often that we get somebody that actually works at the Wall Street Journal. And he's been very gracious to spend some time with us today. We got Charley Grant from Heard on the Street at the Wall Street Journal. Charley, thank you for joining me today. How you doing?
Thanks for having me, man. And guess what? I'm looking for someone to talk to, too. It's been a lonely year.
Oh, listen, man, I can be that shoulder to cry on. We can do virtual hugs, whatever you need,
Absolutely.
Dude. I'm here for you.
Absolutely. I'm here to talk about everything I'm sad about for the full hour. So.
All right. So then where should we start? You tell me, because I'm assuming that your passion for investing is not what you're sad about, or maybe, I don't know, on some days it might be. It's, depending on the pick, right?
The thing about a market that goes straight up every day is it's pretty repetitive. So writing a daily newspaper when the story is the same kind of every day can be a challenge. So it's, we're not risking money in the paper. I'm not making or losing a dime on the market beyond my index funds, but can be frustrating to cover Bitcoin to the moon for day 300. So,
I mean, you had some, there was some WSB chairman, Wall Street Bets for a second. We had there was a couple other. I mean, it's been an eventful year, man. I think should we just start there? Should we start with current events? I mean, we'll get into your background and everything. Might as well start there. I mean, most recent article you wrote was on Bitcoin on the balance sheets now. You cover Tesla a lot. You've been on many shows talking about Tesla as well, and I mean that's kind of the main reason why you brought it up in this article. So what's going on here? Is this now a new trend that we'll see?
Well, I think we've been in a very easy money environment, and I think what has happened, everyone knows where rates are. Everyone knows what central banks are doing. And I think a lot of the risk of business failure at publicly traded companies anyway that have access to the bond market, it has really gone away. I mean, if you told us that airlines who go in, through history have gone bankrupt, annually some airline goes bust, regulars in bankruptcy court could survive a full year of pandemic hobbled travel demand. I never would have believed it. And both because of government money and because the capital markets have been so compliant, they've been able to get through this, and it's really amazing. And that has, some pretty big implications for risk appetites. And so companies are Tesla got all the headlines with Bitcoin because, all right, look, we do sell subscriptions, and when Tesla and Bitcoin go in one headline, we're gonna write that story. But it's, of course, it's not just Tesla. MicroStrategy, this little company most people haven't heard of much, selling converts at 0% interest to buy Bitcoin, and people love it. I don't really have an anti-Bitcoin point of view. I've heard, I don't fully understand it myself, which I'm happy to admit. And I've heard bulls make a persuasive case for the value of Bitcoin. But, it's an untested thing. It hasn't been through many cycles. It's a volatile asset. And if an investor wants to speculate in Bitcoin, they can do that with or without the companies they're some of these CEOs are talking about diversification, and to me, as an investor, you can do your own diversification. You don't need a corporation to be doing that, right? An automaker or a corporate strategy software developer should, historically should focus on that. But we're seeing people kind of dip into this crypto excitement, and it's a wild time, and I have no idea how this will all shake out.
I mean, I guess gone are the days of, I don't know, a dividend or, I don't know, reinvestment or
I know. I feel
buy back stock. Those days
I feel like such an angry boomer. Get off my lawn. Yeah. Where's my dividend? But seriously, the way I read security analysis by Ben Graham a decade ago, and it all made perfect sense and seemed to sort of match with the world we were looking at back then. And if you open that book today, it's like compared to today's market, it's like he's speaking Klingon, right? I mean, it's just not. It's not on the same page, in the same chapter, in the same book as what's going on today. So historically, that has, these things burst, but maybe soon, maybe not. And the investors I talk to regularly who are trying to manage a book in this environment are all beside themselves, because how do you keep up? This is an insane risk I'm taking, but I'm going to take it anyway, is a call I take a lot. I mean, people have career risk is a real thing. Being the one guy who's not making great returns in this environment can be very lonely. And, people don't want to get people don't want to get fired, even if they think the market doesn't make sense. And that's a really powerful force.
Yeah, that's funny. I thought you were going to say, I thought you correct yourself about getting fucked versus getting fired. That was.
Well, you also don't want that. I mean,
yeah.
Some of that in some of the January trading in GameStop and other stocks. But
yeah,
it's a technical term that we can't use in the paper, but I think you know it when you see it.
Yeah, no, absolutely. I mean, it's just there's so many different directions we can go with this topic, and I'm sure you covered them all. I feel like at this point already, I empathize with you on how the newest angle to cover what's happening right now. It's like what new thing will happen next that will cause it to go to 60,000 and this.
Well, in some years, if you ask me 7 weeks into the year, what are the big themes so far in the year, I'll have to come up with some BS, and people will have a completely different list, and they'll say, "What? No, that's not the theme." And this year, I think we can all agree what the theme is, which is Reddit gone wild.
Yeah. Hey, let's go there, man. I mean, let's get your take. Reddit going wild. Kind of this stick it to the man mentality. Wall Street bets, sprinkling a little bit of shades of Occupy Wall Street. I mean, what's been your take on all this?
It was wild. I mean, vitriol towards short sellers is something you see often in markets, but usually it's like after the thing has collapsed. And just hearing people scream about short sellers while the S&P is at 4,000 or whatever, wherever we are now, 30, 38, whatever it is. It seems unusual to me. I think crowdsourced investing could be cool in theory. Like there's nothing wrong with people gathering to discuss ideas, but Reddit has some unique user. I can't believe I have to read Reddit for my job now, by the way, as an aside. But people can upvote what they want and downvote what they don't want to read, which in theory is cool for some discussions. If you're discussing your favorite band, that's cool. For investing ideas, you should probably hear the other side of the story before you risk your money, especially if you don't really understand what's going on. Reddit is, social media is, in some ways, it's nothing new, right? I mean, we had the Yahoo message boards and .com and all that, but the power of the message boards is stronger than they've ever been, right? There's just more and more people
100%.
logged in. Things whip around the world. Someone tweets "game stunk" and at 4:07 p.m. and the thing doubles after doubling during cash trading, or whatever crazy move we saw. You have Ja Rule using his Twitter to tell people to buy whichever one it was. I mean, all this makes my head hurt. I forget which ticker he was evangelizing, but it's democracy is a good thing, and in finance it can be a good thing, but it does have disadvantages, and I feel like we've seen some of them. My colleague Rachel Ensign had this fantastic story about the day traders who were later to the game in GameStop. And while some people, blasted off from $10 to $4.90 or whatever it was, some people caught it at $4.80 and, wrote it down to $50. And I think we should, I'm very sympathetic to everyone who did something they didn't understand, but that's why the markets are not a game, right? This is serious business, and bad things can happen if you play around too much. And also, I mean, that also goes for Melvin Capital, of course, right? It's not just Reddit who got that over their skis, but these are risk assets, and risk cuts both ways.
Yeah, there's two different rabbit holes I wanted to go down. The first thing is, especially with message boards, that you're right. It's not nothing, especially, look, we're in microcaps, like those message boards, especially for microcaps, depending on how much a name is talked about, like that can drive that market. You've seen it yourself, sure. So it's nothing new. It's just been like given just not just like one shot of steroids, for a given year. It's like gotten it was like a couple doses, maybe infinity amount of doses. It's just incredible.
Yeah. And, you can find interesting things on a message board. Like, as part of my reporting, covering the drug industry, there's this website, Cafe Pharma, where all the sales reps gather to gossip. And you cannot rely on this. You cannot rely on this in your reporting, right? You have to actually go verify things yourself. But,
of course,
we've read interesting things on that site that turned out to be true. And, there was a company a few years ago called Valiant Pharmaceuticals that some people might remember. And the message boards were just hotbeds of, crazy allegations for years. And some of them were not true, and some of them were. And, people talk on these things. My point is, you can get valuable information from them, but you just have to be very careful about how you use it as a business journalist, certainly. And it's not the exact same thing from an investment point of view, but you also need to be careful with how you wield the information you have.
Yeah. Well, what's interesting also is that, and this is taking a quick divergence also to another point that you brought up about, how everyone, there's such vitriol towards short sellers, but I feel like in recent years, it's gone away from those that were actually doing quality due diligence and we're just finding frauds, and which was great for the market because you want to get rid of the fraud. You want to have equitable markets. You want to make sure that, good companies are getting rewarded for doing good things, performing, all that good stuff, but recently it's just very interesting to see how that has really changed. There's quite a few investors I know in microcaps that made careers out of finding fraud, and were very good at it. And it was good for the markets, but it seems that it's
then there's
crazy how that's changed.
Yeah, there's the genre of the hit and run short seller report, which is not good. And so what happens, for a few years now, I've had a blanket policy, every so often someone who's written a report will contact a reporter and they'll say, do you want to see it? And the answer is I do, but I do not want to see it before you put it out there. And I'm going to read it like everyone else and wait and see, let things settle down a bit, figure out if you flag real issues that need to be addressed in your report, like that Nikola Motor one that came out a few months ago, like the issues will still be there tomorrow. You don't need it. You don't need to run with it 5 minutes later. And there's some great reports that people put out there like that one. And there's some absolute crap. And, our job in media at a high level is to, and this is way easier said than done, but it's simple. It's not easy, but keep the crap out, show the readers the good stuff, right? That ultimately that's the game. And you got to be mindful of that. Everyone needs a good editor.
Yeah, that's for sure. No, well, it's funny, or not. It's not funny actually, but like like with micros, I remember Yahoo Finance used to publish, I don't think they do anymore, but all the Seeking Alpha articles, and like that, some of those articles that would come out that were short reports would just destroy micros. They would just destroy them. And, some were valid, or actually, honestly, I'm not even totally sure. Some were valid, some were not. And it would just destroy some shareholders that might have been in it for the long term. And all of a sudden they see this short report that, got, published based on, because they have the whatchamacallit, the API set up,
Yeah. Yeah, and without naming names, there's always in these reports like, oh, this guy worked at Arthur Andersen 20 years ago, and Arthur Andersen went bust, so this company's a fraud, and it's like, okay, like, thousands of people worked there, and like some bad things went on there, but also some people went to work and came home like a normal person, and sometimes with the speed of the internet and how fast allegations can be amplified, the context that would show you that some of these allegations are tenuous at best, it takes some time to push back on.
Charlie, I got to ask you, being in the field and checking sources and wanting to make sure, the truth of the story as close as it can possibly be, especially when you're analyzing a short report and at the same time, on the other side, a long report, how do you weigh the incentives, so that for you, when you're publishing a story on one report or another, you're like, okay, these incentives seem like they're genuine. Like, how do you tell what seems more genuine than others, as opposed to somebody just
doing from the reader or from the reader or
I'd say from the reports that you get, from the reports that you read when you're reading a short or a long report.
Yeah, it's hard to, it's sort of case by case. We'll go back to the Valiant Philidor example, right? Like there was the I remember like when Roddy Boyd wrote his first story about the drug supply system, Valiant said, well, this is one plant and is 7% of our sales. And that's all it said. And it didn't say how much of their profit came from there. So, right. And when I go into LinkedIn, I see people who work at Philidor and there's 2 different states. So that's an extreme example of something, falling apart pretty quickly. But you can't, you have to take each of these things case by case basis, especially because oftentimes I've never heard of this company. There's a lot of companies out there, and even if you spend all day doing nothing but capital markets work, you're going to know a small fraction of them.
Absolutely.
As you probably know better than anyone in microcap land. Like, I could barely keep track of who's in the Dow. So,
honest, dude, it is so. There's so much. Like there's just so much information, and how many was there 10,000 plus names? Including all the pink and gray list that come. It's just, there's just so much news, and especially right now with markets being as frothy as they are. It's just flown. I have no other words. It's flown.
Yeah, totally.
Get our name out there. We just signed this LOI. Get it out there.
And what happens with the vast majority of the short reports is I throw up my hands and say maybe, maybe not, because sometimes like I don't even know this company is and how they make money. Like if I've never even read their investor presentation and don't know the first thing about their industry or business, and then you're just presented with all these allegations, it's like I can't follow along here. And you throw up your hands, and the reality is that some of these are legally sensitive, and if we amplify stuff that's not true, that can ruin my career. Yeah. And we talked about people don't want to get fired at the top of the broadcast and the markets. Well, I can assure you, in the newsroom, we also do not want to get fired.
Of course.
So caution rules the day with that stuff. And I think that makes for a better newspaper, but also saves our bacon a bit.
This is going to sound kind of extreme, but like, is this the beginning of the end of the research report, on both the long and the short side? You can give such a quick take in so many different ways. Like what does a research report now do?
sometimes I think the sell side analysts and the business reporters are talking to each other, and there's no client in between. I don't, not every bank and every industry, of course, and not every analyst, but every once in a while I'll call one of them and say, what's on your clients' minds? And they'll say they don't call. So, I mean,
right.
I guess, and I mean, I think that's what happens when the market is in a glide path that's very pleasing, right? I mean, it's easy for me to wag a finger and say, well, why didn't you do your homework with the market? Well, doing your homework has cost you money for a long time now. And it's very dangerous because that can flip at any moment. And, everyone knows what happens everyone listening knows what that would imply. But when is that moment coming? And, if you thought that things looked a little overheated in 2017, you screwed yourself and your clients, right? So, of course people aren't doing their homework, but like it is understandable why these things go on, is I guess what I'm trying to say.
Yeah. So going back real quick, on the Robinhood take, you were following, you published your article, I think, I believe it was yours. I was following yesterday's GameStop hearing. I mean, got to get your take on that. I mean, will anything happen? What could happen as a result?
I was trying to avoid the hearing because, all right, I've sat through a lot of drug pricing congressional hearings before this one. I was concerned, shall we say, that the members of our legislative body might not capture all the subtleties of this situation. So, sure enough, the hearing turns into a gong show, and I turn it off because I have a headache. And one of my better sources calls me and is like, "Dude, log into YouTube and look at the comment section." And YouTube comments make Reddit look like a Mensa gathering. And basically what was happening is people were logging into this hearing and using the YouTube comment section as a chance to pump their favorite stocks, when we are gathered to discuss stock pumping and its, among other issues, stock pumping and its negative effects. It's just unbelievable. I mean, we had people posting things like uranium in all caps, and pumping up questionable biotech investments and second-rate cryptos, not even Bitcoin. I don't think everyone learned their lesson, is what I mean. So, any hope that GameStop, I mean, people who did lose their shirts did learn a lesson. But in terms of there being a mass awakening in the market about the day trading frenzy, did not happen, in my opinion. We might see some restrictions on payment for order flow and maybe some new short selling rules. It's possible. But, DC does a lot of talking and not a lot of doing. So,
right.
I think people's attention spans are shorter than they've ever been, which has market implications. It has news implications. It has legislative implications. Will anyone care about GameStop in 2 weeks? I don't know the answer, but I think it's worth asking that question.
Yeah.
I mean, and we have I think there's 9 movie deals for the GameStop story. These things will take a couple of years to come out. Is anyone who knows what kind of crazy shit will happen, the rest of this year?
Yeah. No.
I mean, maybe that was just a warm-up.
Yeah, who knows? I mean, look, will GameStop even still be around in the couple years when that movie does even come out, or one of the 10 movies that's hopefully is, at least I hope Michael Lewis is involved in some respect. I think we're all hoping that.
I also really hope GameStop management will eventually talk about what it was like and just put us in the room with them, because I'm sure they were just like, what the hell is going on?
What's going on? Should we raise capital? Should we I think they might. There's, a couple other meme stock. I know one in particular that did a $50 million registered or at the market. But I so want to be a fly on the wall in that corporate boardroom. And
Absolutely.
What was going on?
I just want to hear what they talked about. I mean, and with the congressional hearing coming up, it would have been obviously a good thing for the business to inject capital. That might not have been such a good decision for them personally if they raised right before the congressional hearing. Just saying.
Yeah, there was definitely a lot of there was a lot of thought pieces out there about like, why didn't they raise capital? And then like, you know, there was actually really some very smart people putting out some really good business strategies on like, hey, go raise capital and restructure the company in this way to do this kind of thing. And some of the ideas were actually pretty good. You know, it was just like, I remember, but like you said, I'm sure that was probably the number one. They know there was probably going to be a congressional hearing coming up, and it would just look so bad. It was
so bad.
So bad.
And look, everyone in the finance community wants to laugh at Congress because they don't understand any of this. And look, I laugh too, so don't get me wrong. But like, those people can mess your life up if they want to. So, and I don't think the GameStop management team isn't aware.
Yeah. Oh no, for sure. For sure.
Like, I mean, yeah.
No, you were saying no. Finish that up. Sorry.
I was just recalling Martin Shkreli rolling his eyes at them in the drug pricing hearing a few years ago. Probably. I understood the impetus to roll your eyes, but not necessarily the best business decision.
Yeah, you got to take, no matter what your thoughts, you take it seriously. Like this is Congress, this is government. Like you don't mess around, and especially, I mean, you're dealing with people's money as well. You know, like you don't. But all right, so I wanted to move on to another topic because this is another area that you cover quite extensively, which is biotech. You know,
sure.
Biotech's COVID-19 vaccine development, you know, where are we currently? I mean, I think most of us probably have some idea of where we're at. You know, we got Pfizer, we got Moderna, Johnson & Johnson is about, I think they have their one that's about to come due. You know, but actually the main reason I wanted to bring up this topic to you is because back in March last year in April, any microcap biotech that put COVID-19 in their press release, especially if they were looking at developing a vaccine, I mean, they shot up, 20, 30, sometimes over 100% just in a day.
Oh, yeah. And actually, that happens every time there's, you know, an outbreak of a scary disease. Even, you know, Ebola 5 years ago. If you said Ebola 6 years ago, whatever that was, I think 2014. But if you put Ebola into a press release, off you went to the races.
Yeah, Ebola. I think SARS also. There was that happened as well. You know, so I mean, you know, the rollout has, despite there being some hiccups and problems and whatnot, it's been quite extensive. I mean, Israel is doing amazing. I think I saw a stat on CNN today is over 50 million shots have already been gone out. And, you know, do any of these microcaps have a chance? You know, I mean,
that's the thing is like, and, you know, there are companies who have done, like Novavax is coming in a few months. The data look fantastic. It's obviously a very good vaccine, and there will be demand for it around the world. But to your point, you know, Pfizer is cranking. My colleague Jared Hopkins just reported a few minutes ago that a second Pfizer plant, not just the one in Kalamazoo, is going to start producing vaccine down in Kansas. I don't know exactly what they said about picking up the pace, but the pace is picking up considerably on that front. J&J, just one shot, cuts the number of shots you need in two. I was talking to secondhand, but I heard of a hospital vaccine rollout director for one of the New York City hospital systems. And one reason the Johnson & Johnson shot will really speed things up is once they get their manufacturing in order is not just the one shot and you can give it in the doctor's office. That part is certainly true, but is self-explanatory. The other thing is with the Pfizer and the Moderna shots, you need to be monitored for anaphylaxis reaction. And that only takes 15 minutes, but it's a big staffing backlog because obviously you can't just staff just anyone to watch for that and be ready with the EpiPen. And the J&J is not going to be an mRNA vaccine, and that doesn't seem to be a concern in any of the clinical literature that I've read. And the big centers can just thank you very much and push you out the door. And I think that's going to, at a given site, that's going to dramatically increase the capacity of what they can do in a day. So all that is great news for you and me. I'm pretty sick of living in a hole for going on month 12. and I'd like to get back out in the world. It's great if you own the leisure stocks. The vaccine stocks could be in trouble, the smaller ones. And it's through no fault of their own. They might just run out of time. And I think that would be a happy day for almost everyone. But I think if you're holding on to those, you have to consider the risk that the pandemic will end sooner than people think.
Right. Yeah, because I remember I don't own any of these stocks, but like I remember if I were to have a thesis, I'm like, okay, well, it's a race to the vaccine, right? But at the same time, you might need, as we've seen, more clearly more than one vaccine in order to address the entire human population out there, right? So that leaves room for some of these speculative companies that are going to develop a vaccine, and maybe a handful of them work, and they go out to maybe some of the more rural areas or some areas that won't get direct access to some of the big pharma ones that go out there. But
sure.
Clearly, the rollout.
There will be markets, right? Like, I mean, there's a lot of countries in the world that haven't started their vaccinations. But all right, let's just pick a random country. Peru. How much are they going to pay you for your vaccine? Not what the U.S. is going to pay. And I think as you go farther down the stack into the developing world, what you can reasonably expect to book in revenue is just not. It's not going to be what people are hoping for. So, there's still hope because we don't know how many, we don't know all these booster shot issues. We don't know how often, we don't know if this is going to be a flu shot kind of deal where you have to go every fall to do this. But, biotech stocks have a ton of risk in them because that's the way things work. And the number one rule with biotech stocks is be careful. And the second rule is don't forget the first rule. So
yeah, I was just going to say,
be careful. Warren Buffett's thing, but yeah, be careful.
Yeah, man. Well, because you wrote an article that came out on the 17th about waiting for big pharma's coronavirus profits to impress Wall Street. So what was your thesis there in this article?
Well, it's funny because a huge cash pile in big pharma is almost a negative, right? It's like, well, what are you going to reinvest this in? So Pfizer's going to book $15 billion in revenue this year from its COVID vaccine. That was probably a low ball because that guidance only includes actual contracts that have been signed, and there will probably be more. So, that's going to be, a lot of money for them. But the stock has been, straight down since the day they first came. Not straight down, but it's a good 20% off the highs of when they first came to us with the good news in November. And the market is basically saying, okay, we're done. We're not giving you any more credit for that. And, that is just a market contrast to Moderna, Novavax, all these other things. Moderna is going to have a huge cash pile, and they still have plenty of good investment opportunities. So I don't think that should be held against them. But, Pfizer and Gilead Science is also selling a lot of that remdesivir stuff, and maybe it's all a one-time thing and shouldn't be counted when you're doing a DCF. But I don't know. Maybe this lasts longer than we think. And if not the pandemic emergency, but the need to get more shots,
right, on an annual basis. Right.
The whole COVID apparatus, getting swabbed before a concert, whatever they're going to make us do when we get back out there. And I think it's just one of the big investment questions in healthcare is just both how long will the emergency last and how long will the COVID infrastructure, for lack of a better word, be needed? Testing, therapeutics, vaccines, the whole shebang.
Yep, absolutely. So my last biotech question for you is, in general, what would you say investors get wrong the most when considering a biotech investment?
Don't assume the stock is going down if it fails.
That's a good one. I like that.
Yeah.
There you go. Okay.
So I know some, I think you have to anticipate not only what the compound is going to do, but how management is going to frame it and how people are going to react to the framing, right? So companies, for instance, there's a lot of things management teams can do to keep their share price up, even if their drug isn't really a winner. Company X has very positive meeting with FDA. You see that press release all the time. FDA doesn't comment on company meetings. So it's a great trick to hook a retail investor who's new to the game, because it's utterly meaningless and sounds great, and no one is going to rebut you definitively. Pretty good scheme, isn't it?
Oh yeah. I mean,
well,
yep.
I'm in the wrong line of work.
No, it's pretty. I mean, that's not something I ever could. I mean, because most of the time, especially in micros, it's like immediate. Like it doesn't matter. It doesn't matter how they spin it. It's it's immediate. Like they weren't in the top line results were not, and
yes.
Not statistically significant, exploring other avenues of, for this or something like that.
The other thing, and this is a general point, is if a drug works, they don't need to give you subgroup and post hoc analysis and this randomly selected 8 patients out of the 200 patient pool, and these did really great on the dose that was 3 times as big as everyone else's. If it works, the communication that it works should be pretty simple.
Right.
And if it's not, that's a concern. The other thing is, when a drug is approved, that is often when there'll be the most press around it. And that's actually when a biotech is at its most dangerous point. Biotech is really good at developing drugs. Big pharma is really good at selling drugs, and there's a big difference. And sometimes a company that's just developed their first big winner might choose to sell out to big pharma altogether, so they can get this product distributed, get a sales team, a sales force, all that stuff. They might partner with big pharma, or they might choose to go it alone. And choosing to go it alone has a lot of downside and not much upside. And it might make you wonder what the big pharma people actually thought of this hot new drug.
Interesting.
All this is uncertain. The thing about biotech is there's so little to go on as an investor, right? I mean, and that's what makes it fun to cover, certainly, and fun to invest in, as long as you don't get smoked out there. But you could be staring at the next Jonas Salk side by side with a total huckster, and it's much harder than you think to tell which is which.
Yeah.
And it's the best of the capital markets, and it's the worst of the capital markets, all in one wild place. So it's a lot of fun to cover, but it's also a very dangerous place to invest.
100%. That was some of the best advice I think I've had on the podcast when looking at biotech, and both of those things that you just said. So everyone listening, definitely write some of that stuff down, because
one caveat on my biotech advice: I'm a history major, okay, and I have never predicted whether a drug is going to work in the paper, and I will never do that. That's just not something I'm qualified to do. So don't ask. Not you, everyone listening.
Yeah, no. I mean, look, anybody who can do that, power to them.
Yes.
that is just how.
There are people I can call on who I trust, but they have the science knowledge, not me.
Yeah, no, absolutely. So, okay. So, I mean, before we get to your background and philosophy and everything, have we missed any current event? I mean, or is everyone going to kill me for not asking you at least to get some soundbite on Tesla?
My God! Are we? Does anyone really want to hear about that anymore?
I don't know. Look, like I said, it's a microcap podcast. It comes up every so often as like a case study in some respects. You cover it extensively.
Well, it is the avatar of this market, right? I mean, and as long as Tesla's hovering at $800, it's hard for me to see, stocks really falling too far. As long as the risk on bat signal is out there.
Yep.
That's
yeah.
I continue to not be a believer in the Tesla story at all, but the stock market says otherwise for now, and that's fine.
Okay, so I have to ask you, how does it? What's it like being a Tesla bear in the FinTwit community? I'm sure it is
a lot of nasty emails and a lot of nasty tweets.
That sums it up right now.
A few years ago, I was driving back from a ski trip with my spouse and fired off a Tesla tweet before I started driving. Asked my spouse to hold the phone. You got a nasty gram? You got another nasty gram? Is this what you do for a living? that was the conversation. But it's, I think if you are in a newspaper opining about markets, you have to be willing to take stands that are not always popular to be of any use to your readers whatsoever. So that doesn't mean that my stance is good and yours is bad, but I have to follow where my thinking takes me. And I will never tell people buy a stock because it's going up. If you're running a book and need to keep up with your benchmark, I mean, you might choose to do that. And like we talked about at the top of the hour, but what is liberating about writing for the newspaper versus, running a long short book is I can have a bad month and I'm still going to be here. And so I think that's of course I don't get a bonus, but it's liberating. And I think you have to take advantage of the flexibility that gives you and say what you think.
Yep. Now look, it's your responsibility to take a stance, one way or the other. And, you just hope that people at the end of the day will respect that it's a well-researched stance. It's not like it's just a take, and that's as long, yeah.
What is funny to me though is how angry the diehard bulls get. Like, look, if I was long a stock that IPO'd at $20 and went to 4,000, okay, I would be too busy counting my money to care what some jerk at the newspaper said. And for whatever reason, that's just not what's going on. And I got an email like one of the days when Tesla was ripping this summer, which was every day, but I wrote a Tesla article, same message, same theme as always. And I got an email from a guy accusing me of ruining his special day. And it was like, I ruined your special day?
You wrote back to figure it out, right? You had to, you wanted to hear what no, okay, all right. Fair.
I did not. I let that that's between you yourself and your shrink. But
yeah.
I mean, like Tesla is a wild story. It's a lot of fun to cover. People are passionate. People read it. And you should have a thick skin if you're going to be a media member in there. So
that's for sure. That is for sure. I mean, okay, my one last Tesla question, because this is something we talk a lot about in microcaps, talking about management and intelligent fanatics, shout out to Ian and his crew on the, Intelligent Fanatics series, Ian Castle I'm talking about. And I've been wanting to do an episode at some point for one of our other shows, the Investors Roundtable, talking about intelligent fanatics and just getting a better understanding of like our modern day ones and what that means, so it's almost, I'm not by any means about to then imply that, Elon Musk is an intelligent fanatic by any means. I'm not here to make that claim or whatever. I'm not at the paper, so I don't have to make a stance one way or the other yet. But what's it like for you when you have that stance, when people see him in that light? And by all means, even if you're not an investor in Tesla, you want to see it succeed in the sense of all the potential things that it, all the good that it can potentially do in some of his endeavors there, right? But like, what's your mindset?
The Model S is a sweet car, and I wish I could afford one. How's that for?
It's awesome. That's awesome. It's an awesome car.
Totally. So I think he's such a dominant personality. I mean, like I think it was a couple of years ago, but the Gallup most trusted person in the world. It's always the current US president, like the Democrat, the opposition. So it's like Trump, Obama, Pope Francis, Elon Musk. And he only got like a small portion of those votes. But like it was striking, no one else, there's no other CEO. Most people can't name a single CEO besides him, right? I mean, if you ask your average buddy who's not in finance, like name a CEO, they'll say Elon Musk. They might know Tim Cook.
Bezos, maybe.
Maybe Bezos. Oh yeah. Well, not anymore.
Yeah, not anymore, technically.
Although I don't know when that's effective. But anyway, he's such a dominant cultural force that what he says carries such great weight with everyone. And, I think that's been a tremendous advantage for the Tesla business. Not everyone can move markets with their tweets.
That's for sure. That's for sure.
I sure don't. And in terms of like what it's like to be, on the other side of this, I mean, it's pretty funny. I mean, all my friends from college are buying calls, getting rich and laughing at me. So,
yeah,
but they're, beers on them. So fine.
Yeah, exactly. It's like, no, you guys are right. Yeah, here we go. All right. Well, I think that we've covered our current events portion of the podcast. I think we're only 45 minutes in, and then finally getting to your background, which I find equally as fascinating. So, I mean, let's go there a little bit before you have to get out of here. But I'd love for you to share with the audience, where did your passion for investing start?
It started when you graduate college in 2008 and need a job and bounce around for a couple of years.
Fair enough. Yep.
I grew up, my father has been in this business for a long time, and I grew up with market ideas around us at the dinner table and all that. I really thought I wanted to do something else with my life, but I didn't know what. Taught school for a couple of years, taught English in China, overseas. Right out of college. I was over there for when Lehman failed. That was pretty crazy. It was like, I just did not, I'd read these articles and be like, what? That can't be what happened. So Lehman failing, what happened, my first thought was, oh shit, I should have done more homework in college. Because, I don't have a job when I'm coming back to the States. And it looks like the economy has completely gone to hell. All my buddies who are, moving to New York from college to start their 2-year iBanking analyst roles, all flushed, everybody out. So that was quite an intro to the adult world. My father was nice enough to give me a job at his shop when 2011 or so, told me to go get my CFA at night while I worked and learned how markets work. Did that for a few years. Got kicked out of my dad's basement, moved to the Journal. And I've been here ever since. So I just finished 6 years this week. So
wow, congratulations! Why did you? So what instigated the move then from working at your dad's shop to then going to work at the Journal?
I think Grant's Interest Rate Observer is this great place, but it's Jim and a couple other analysts, and it's going to be his show. And over the years, most of his analysts have stayed there for a few years and left just because you outgrow the role. So moved over to do Heard on the Street at that point. They were looking for a new writer. And then 2015, that they thought they'd start me on a boring beat, US pharma and biotech. Of course, that was the year of Valiant and Martin Shkreli and the XBI getting sawed in half, and campaign ads from presidential campaign candidates, vowing to crush the industry with their bare hands. Pretty wild stuff. And unfortunately for me, the first year was the most fun. So, it's like when you go to the amusement park and ride the roller coaster first, and then everything else is kind of a letdown after that. But, it was, those stories were so great just in terms of how rich they were to cover, and so much fun, such hard work, so challenging. And you figure, what you learn, and what I love about markets really, which I did not understand as a kid, but I've come to love this, is, if you are like a dentist or a plumber. You can learn everything there is to know about teeth, plumbing, right? With markets, the game changes on you. No one ever really solves the puzzle, right? And people do for a period of time, and then the rules reset unbeknownst to that person, and their style doesn't work anymore. And you can spend a whole lifetime with this and not master it. And some people might be turned off by that, but I just love that, because every day is something, newish, and the possibility of something new. And it's exciting, and it keeps me motivated and, ready to get to work when I wake up.
Absolutely. So, I have to ask, because, as someone, I grew up in a family where, my father was on Wall Street, he owned his own investment banking firm for many years. And, there was those conversations that happen around the table, but were you also that same person that, like, because there was time where I was like, talking about business, I don't want to hear about this right now. Like, there's definitely times where, especially now in hindsight, especially working in the industry that we are now, I'm like, oh, I wish I was paying attention just a little bit more.
Yes.
Like, do you feel that?
Yes, along those lines. I remember I was. That's a great one. I was I must have been a junior in high school, just miserable, sullen teenager. And 3 weeks, for like 3 weeks, every day, Dad gets up from the dinner table, get on the phone upstairs, Enron. I'm like, God, well, shut up about this Enron thing, right? And then watching CBS Evening News, they're like, Enron disintegrated into a pile of, right? And it's like, oh, so that was important. So yes, wow. I did not understand the mechanics of Enron in real time. I understood Enron important, Enron gone.
Wow. Yeah, no, that's a great story. Oh my God. I'm sure you have a million of those just like that, where you're like,
yeah. Well, that's the one that's the most vivid to me, a couple decades later. But yeah.
Oh, absolutely. So I also have to ask, I mean, now that you've been covering the markets many years, and if you said at the top that I believe you don't own any individual names, you index because
Yes. I mean, at the Journal, you can't, no options or short selling or anything like that, right. Ever. No individual names you don't cover. And it's just easier to you never know what you'll be asked to cover in the future. Yeah. So it's just not do. Also, my picks are terrible. So.
I mean, every Tesla bull will agree with you, right? Like, yes, you're right. Your picks are absolutely terrible, Charlie.
Finally, they're nodding along with something I said. Yes.
They're like, yeah, no, we, check that box right there. They're like, Bobby, come on, take that clip out and share that one, just that one. But if you had to have, like an investing philosophy, if you were, actively looking at individual names, I mean, what are some things that you would look for, especially right now, as we're recording this on February 19th. What are some things that you look for right now? That's a big question. I know.
You mean in a good long?
Yeah, in a good long. Hey, on the long side. Yes, on the long side. I think on the short side, we know where you stand.
Yeah, well, yeah. Don't on short selling. Don't is my main advice.
Yeah.
I think I'm not sure if there's a company out there that exists today, but one of my favorite stories to write about over the years was this company called Enanta Pharmaceuticals, and they were a small company, and they made a key ingredient in they made an ingredient in a pill that AbbVie made that knocks out cures hepatitis C, and they were this amazing stock because they were developing all this exciting biotech stuff and the usual roll the dice and see what happens, with the clinical trial was there. But they were making like a good amount of money off their royalty income just from this existing product. And there was a real floor in the stock just because cash is coming in the door. They won't have to, issue equity at a fire sale price if the trial doesn't work. And it was a situation where you had these like 6 or 7 good shots on goal. And I think many of these have missed, unfortunately, but you knew that they were making money and there was a base level of, okay, it's not going to be that bad if this doesn't work out. And, I think that was, like, those situations are, of course, very hard to find. They don't come around every day. And that stock did very well for a long time and then started to come back a bit. But I guess the point is you can find things if you look around that, just try to find ways to make it heads, I win, tails, at least it's a tie.
Yeah, everybody thinks about biotech in that like was it what's blanking? You're the writer here. I can't think of the word. Is it's either it works or it doesn't. Especially when it comes to results, especially at the microcap biotech world where it's like phase 1, good data, not good data.
Yes.
What's the word? What's the word? It's a I can't think of the word. I don't know why, but you know what I'm trying to say.
Well, the one press release you never want to see is provides business update.
Yeah.
But if company has provides business update, figure out your new job. It's over.
Provides business.
That means they blew up the labs.
Oh man, that's too funny. All right, well, I want to get to story time. Because and this is my favorite question to ask everybody on here. So I have to ask you. And I'm going to adjust it a little bit. What would you say is an investing story or just something that you covered that really impacted your career the most? You mentioned, what was the name of the company? Enanta? You mentioned that one already. Anant, what was it?
Enanta, yeah. And that was just
Enanta.
a fun one. Enanta, yeah. Enta is this. That was a fun one to do. I wouldn't say that had a deep, profound impact on me. But I think there was a story I did just about, I think when price gouging was such an issue, I think we did some really good work to get to the bottom of, who was really responsible for drug prices going up in a way, so everyone ganged up on Martin Shkreli because he was so in your face about everything he was doing and would go on TV and brag about it. Turns out Martin learned his price gouging techniques from people. He learned that from someone else. And that someone else was eventually admitted into the pharmaceutical lobby, PHRMA, where they were starting a company called Marathon. And what they were going to do was exploit an FDA loophole where I forget the technical reason, but there was no generic available for this drug. And it's just some old drug treating some old, condition that's in theory not that lucrative, and take the price from a gumball to a few $1,000s a pop. And, that person was going to be led into the pharma lobby. And we were like, whoa, you guys were just saying 6 months ago that Martin doesn't represent us and who we are as an industry. And I was like, well, looks like it does. And I had an interview with Martin and he says he learned this trick from you. So what do you guys have to say about that? And they didn't have much to say. And, that was a real eye opener. I'm not saying that people should be sympathetic to Martin or not. He's a controversial guy. He did raise the price of that drug by quite a bit and made people upset by that. But, I think it taught me that, people are always looking for a scapegoat. And if you have a scapegoat for a complex problem, you're probably all wrong. And I went on Fox News to talk about this, drug pricing as a more complicated than a scapegoat thing when the EpiPen drama was raging. And the Fox News guy yelled me off the air after 5 seconds. I thought since we all worked for the same company, I was exempt from that treatment, but definitely not. So it was pretty funny. It was. I felt during that interview, I felt like I was the one who had personally raised the price and was being asked to defend myself. But I think I think there's so much more to do in the future about this topic and just peeling back the onion of how this all works and how middlemen, stick their fingers in the pie, make healthcare more expensive for everyone. But what I've learned is, big pharma is certainly not perfect, but it's just way too simplistic to say they set the price and they do that because they're cruel and there's no, they could just lower all their prices tomorrow if they wanted to. It's really not that simple. And, I hope that over the years, our work on that will, maybe lead people to rethink, what is a smart healthcare policy. But in the meantime, drugs are a great business because and healthcare in general, because there's really not much price control for an essential, what people can't live without. So,
I mean, look, I know this could probably take us to another hour of chatting, which I know you love to do. But I mean, just real quick.
I would, but I'll have to come back.
Yeah, I was going to say, we'll come back to that topic at another time because I would love to learn more about, why it's not so simple, because I'm sure people would love to understand that. Although, give us your quick take as to why it's not so simple, if possible.
Well, hang on. Yeah, sorry. Just my dog is making a noise behind it. It's benign. I just had to see if he was chewing a toy or my stuff.
No worries.
Yes. The basic thing is that health insurers control all spending levels in the country, and they make more money when prices go up. It's part of the design of the Affordable Care Act. And the Affordable Care Act, a lot of people got health insurance who wouldn't have had it otherwise, by expanding Medicaid and all that. And I'm not a politician. I don't do politics, but getting people more care is good. It did nothing for cost control though. So it was like the best thing that ever happened for the industry, right? Access increased and put it on the tab. And so, the insurers aren't, they talk about corporate, they talk about runaway healthcare prices, but they really don't do much about it, do they? They have a lot of power. And, and pharma is an unpopular whipping boy, understandably. But it's when you hear, I can't get the drug I want, or I can't get the drug my doctor asked me for, your first thought is, well, screw that drug company. And it's not, what's my insurance plan design and who's the middleman and what does the middleman's contractual incentives look like? And it's just a very hard, and I think that's a big advantage that the middleman have had in this, policy debate is because, who's going to think of them? No one even knows what that is. And it sounds boring too.
Right. It's like, and also how do you control that? Right. Like,
Yes.
Drug gets developed, needs to get sold. And there's all these other controls in there. But I mean,
we are the only country where negotiating on drug prices is a lucrative for-profit business. And they're not doing, they're doing a great job for their shareholders, but not so much for, plan design holders. So, it's going to be an issue for the rest of time. And healthcare is, a sixth of GDP and really contentious and people get emotional about it. So it's an exciting time to cover this.
No, absolutely. And one last question on that story time. You mentioned that you did an interview with Martin Shkreli. I mean, have to ask. Sorry, I know you got to get out of it. I have to ask about that experience. I mean, what was that like? And what kind, what time was it too?
This was probably 2017.
Okay.
So he had been in the spotlight for a year or so. I think it was. It's funny. I guess it's different when you're a TV reporter versus just there with your notepad. But it was nothing like what you would see on CNBC where he's doing his WWF thing. It was he was a quiet, respectful guy when I talked to him. So I don't know him well, but I haven't spoken to him since his trial. It was not like what you would expect from watching the press clips on CNBC or whatever.
Interesting. I mean, my last question on it. What was the what was the one?
What I did.
I know, man. I'm sorry. I can't help myself. It's my technique. Yeah, it's the curse. It's the curse of having the podcast where we literally have no time and yet do have a time limit.
Yes.
But I mean, what was the one thing that he said that I know in general just how it was, but like, what was one thing about the whole situation, being the farmer bro and raising, what was the one thing that still surprised you though, about some of the comments that he made to you during that interview?
Well, I think I was just surprised that, I had been surprised that, this playbook had existed for as long as it had. Like, the reason people didn't know about it was because people pursuing it were quiet. And it was probably to Martin's great personal disadvantage that he did interviews about what he had done and things like that. But it was actually a huge public service to put all these issues out in the open, even though that wasn't really his intention per se.
Yeah, no, I'm sure it wasn't.
Life happens in interesting ways.
That is for sure. All right, man. Well, okay. Now we're finally rounding the bend. My final question for you today is, and you've given some great advice already at this point in covering the markets like you do. But, for those new investors out there that are looking to invest in the stock market, what advice would you give them, when they're looking at the markets right now? What should they be doing?
Start with the most boring stock you can find. Canned food, something like that. Learn what a stock is, learn what a dividend is, learn what time is in the market. I have a friend who texts me every single day asking me if the S&P is going to be up or down tomorrow. And what should I tell him?
Yeah.
I guess up.
Yeah, like what do you say? There's nothing to say. It's like, I'm not an oracle.
Yeah. I try to say, well, that's kind of not really how this works, but that's not. It's two ships in the night. We're having two different conversations. So
yeah, no, that's for sure. Yeah. All right, man. Well, with that, where can my audience go and find more information about you, follow you on social media, and just read and listen to all your good stuff?
If you somehow did not get enough just now, C Grant WSJ is my Twitter handle. I post all my articles there. And if you search my name on WSJ.com, there's a handy biography page where you can find all my articles.
Awesome. Charlie, this has been an absolute pleasure. Thank you so much for doing this, man. I really appreciate you taking the time. And have a great weekend. I look forward to talking to you soon.
You too. I had fun. Thanks for having me.
Of course.
This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap Podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.
This episode of the Planet MicroCap Podcast is brought to you by Friedman LLP, a top 40 global accounting, tax, and business consulting and advisory firm, providing a full spectrum of services for public and private companies since 1924. Contact Friedman when you will need to raise capital and adhere to U.S. standards. The Friedman partners will work diligently with you to provide the financial assurance, regulatory, and transactional services you need. When the stakes are highest, Friedman makes sure you are well equipped. For more information and to get a Friedman free consultation, please call 856-830-1660 or email Neil Levine at NLEVINE@friedmanllp.com. Again, for more information and a free consultation, call 856-830-1660 or email Neil Levine at NLEVINE@friedmanllp.com.